99% of people ignore this signal. But the most interesting thing is that it appears before every major crisis, and right now it's already present in the market. The rise in gold isn't about a pretty chart or easy money in a trend. It's about money starting to get scared. And there's only one question. Do you understand the processes happening with gold, or will you lose money in the upcoming crisis? Now, let's rewind things a bit. The year is 1971, the USA. In fact, they abandoned the gold standard and the backing of the dollar. What happens next? A hidden crisis of trust begins. Money is being printed. The system is changing. The masses don't feel it right away, but big money does. And that's exactly when metals start to surge. Not because everyone decided to buy gold, but simply because it's time to look for protection. This is a key point. Gold doesn't rise on hype. It rises when people stop trusting the system. What happens next? Then comes the crash. The crash of all markets. If you think this is just a story from the past, take a look at the market now. The scenario is repeating itself. And this time most people still don't see it. In this video, I'll show you the 3 stages of gold's growth, when the markets will start having problems, and which signal all investors are ignoring, as well as how to preserve your capital and maybe even profit from the upcoming crisis. Because the question isn't about gold's growth, but whether you understand what's happening with the market right now. There is a logic to gold's growth, and the entire cycle can be divided into 3 stages. Stage number 1 is smart money. There is no news, no hype, but the government is increasing and building up its positions in gold. For example, this is exactly how Bitcoin grew in 2020 to 2024. Stage number 2, public growth, or simply put, FOMO. The price has risen and the market notices it. News and analytics start to appear. Explanations are given and they tell you why this is happening. The crowd arrives, FOMO begins, but there is an important nuance. The inflow of money is already slowing down, the price is rising, but money is coming in less actively. This is a signal that the finale is approaching. Stage number 3, which is actually the finale itself. First, a sharp correction, then one last upward impulse on the news and at peak attention. And it is precisely here that the last investors enter. After that comes the reversal and the crash, because the big money has already exited long ago. The cycle here is very simple. Accumulation, hype, distribution. Go ahead and write down in the comments section below what specific stage you honestly think gold is at right now. The main mistake is waiting for a sharp crisis. The market doesn't work that way. All problems start in advance. There are 3 signals by which you can identify the beginning of an approaching crisis. Signal number 1. Gold is rising, but the market is still holding steady. The S&P 500 is standing still, or slowly setting new highs. The news is positive, but money is already starting to flow out of stocks. This is the first signal and the divergence between the markets. Next, the market loses momentum and movements become choppy. Corrections get deeper. Liquidity contracts. Major players start reducing their positions, but visually everything still looks fine. Signal number 3. Sharp drops downward, followed by quick rebounds. An illusion. It's just a correction. But in reality, the money is already leaving. So now I'll switch to the chart, and right now I'm thinking about the best way to do this. It's exactly these 3 signals that we are starting to see right now on the gold chart. This is the daily chart, the one I've been maintaining for quite a long time. This chart, it's a daily chart that I've been keeping for years to assess medium-term and long-term prospects. We need to start back in 2025 and take a close look at how the growth happened. At first there was a typical consolidation. This was from April to August of 2025, then the acceleration began. News started coming out that metals were in demand, that there was some kind of shortage in the market. And in reality, there is a shortage of metals, particularly gold and silver. So demand is rising and prices are increasing. Pay attention to what is happening during this process. During the process, there are 2 corrections. In fact, during the process, there are 3 very small corrections that only partially offset the previous growth. That is, not a single previous low was touched. None were. And the price goes up again. In the final stage, there are sharp movements, as I mentioned. First, we form gaps which further accelerate our movements. And here is the first drop, which was formed at the beginning of 2026. Now in April, actually, at the end of March 2026, we are witnessing the second drop. From a strictly technical perspective, we are currently in the process of forming the very first significant and sharp decline, which really should serve to scare many of the investors and provide them with a clear opportunity to exit their positions right at this moment, at break even or at a loss. However, there is still no divergence on the chart, meaning there is no discrepancy between the indicators and our price movement yet. At the same time, a reverse divergence is forming. That is, the decline is small in absolute terms, but extreme on the indicator compared to all previous years of the current trend. It is exactly this specific type of market movement that is frequently considered to be the penultimate stage of the cycle. And it is immediately following this phase that a final new high is formed, and then the crisis begins. That's it, basically, that's all. Specifically for the current situation, I have prepared an idea showing exactly where to buy gold before the final rally. And I published it in my monthly journal, which you can download via the link below this video. Now, let's move on to the fourth signal, the most important one, the final stage, which 99% of all investors will ignore. We looked at the chart, we saw where we are, and we understand what lies ahead. And now, listen carefully about the main signal. There will continue to be news about new all-time highs, which will lure in yet another crowd of FOMO investors who will want to get involved in gold. At the same time, you will occasionally come across notes that funds are starting to exit metals one after another. The new all-time highs will be accompanied firstly by divergence and secondly by lower trading volumes in the market. In other words, there will be less volume, but new highs will still occur. That's it. After that, there will be a crash. By the way, I have one. A video about metals for 2026, about all metals, platinum, palladium, copper, and gold. I recommend watching it and in general subscribing to the channel. Everything I do is about how to make money in financial markets and not lose money here. And now we move on to the main question, the reason we're here today. How to preserve your money and take advantage of the crisis that we are about to witness in the near future. I have prepared for you 5 key actions that you need to take in order to preserve your capital. First, exit risk before the crash. At the moment when you see the presence of divergence, weak movements, and most importantly, a new high in gold, reduce your positions in stocks to a minimum. Gold will be an indicator of the upcoming crash. Second, learn how to make money on shorts. That is, how to sell instruments, futures, stocks, and profit from it. A crisis is a sharp decline. But technically, it's just a change in direction, which you can use to make money. Third, study technical analysis. Everything I've shown you, everything I've talked about is very easy to see on charts in terms of volumes, indicators, wave structure, but you can't see it through fundamental analysis. Everything you'll hear along the way is just news, new highs, new investors, new funds. All fundamental analysis will tell you after the fact is that the crisis has already started. And fourth, possibly the most important thing in your life, don't use chaos and don't trade indiscriminately. Don't trade everything. Wait for your own conditions. The whole point of trading is simply to identify a working model and use those rules consistently. Today, tomorrow, or the day after tomorrow. As soon as the right signal appears, we trade it. The rest of the time, we stay on pause. The market always gives a chance, but only to those who understand what's going on. That's all from me.